Morning and welcome, Patriot Radio News Hour. Joe and Jason on this Friday. Yes, we've made it through another month. It is now November, the first day of November. I hope everybody had more treats than tricks pulled on them on Halloween. As we get ready now, we're closing in the big week next week. Obviously, we've got the election. Well, we'll see. I guess the voting ends anyway on Tuesday. And don't forget, we also have a Fed meeting. They moved it a day for the election, so it'll be Wednesday, Thursday next week. And based on today's reports that came out, looks like they're going to get a ranking. They got exactly what they needed. The jobs number on Wednesday, ADP, I was like, wow, that's a little too good. Jobless claims yesterday, they looked, kind of boring like they've been. But then today, the big number came out about the government saying how many jobs were created. And it's hard to even think this number's any closer to any other of the crappy numbers they've been giving out. 12,000. That was it. Just 12,000 jobs. Almost a negative jobs number, which obviously makes no sense because there is some seasonal hiring going. Has to be. I mean, come on, man. But anyway, that was the number that they put in front of us. The bond markets, boy, wild again. At least in the UK, things have calmed a little bit. As remember yesterday, disaster in the UK debt markets as they were like, hey, this budget doesn't work, right? More spending, more taxes. Same, I think, is going to be coming down the pipe for the United States. Get yourself protected here. 800-951-0592. That is our toll-free number. Obviously, gold and silver is what we do. allamericangold.com is the website. But yeah, so not only was there 12,000 jobs, they said, hey, well, did the hurricane affect anything? And the answer didn't appear to be. I don't know. They revised downward 112,000 jobs from the last 2 months report. So they revised, September and August down less to 112. The unemployment rate, it did stay at 4.1, but barely. So it went from 4.051, so they rounded it up, right, to 4.1, to 4.145. So, almost if they've gotten a couple of hundredths more, they would have rounded it to 4.2. The big factor there, the labor force participation rate dropped 0.1%. Otherwise, the unemployment number would have been almost 4.3. And then when we look at the birth-death model, Jason, they added 368,000 to get to the 12,000 jobs they said was created. All in all, Jason, I think this guarantees we're going to get a rate cut next week.
Yeah, and I said a few months ago I felt like the seasonal hiring this year is going to be really lacking. Remember, Joe, I said that a few months ago because I think for tax purposes and for lack of consumerism, they're going to try to liquidate a lot of inventory because anyone that's a business owner out there knows that if you have a whole bunch of inventory at the end of the year, that you're supposed to count it up and you get taxed on it, right, Joe? And you don't want to hire a bunch of people that aren't going to sell very much stuff. I'm sure at some point during the Christmas season they'll say, "Oh, it's record sales, it's record Christmas sales," but I'll be looking at my neck of the woods, Joe. I bet it's a little sluggish this year.
Well, it's interesting. The one other thing in their quits way down. So that's the other thing. So you know what? People are not feeling like there's better opportunities out there for them, and so they're staying with their job. But here's the good news. Wall Street loved it. Loved this horrible jobs number. And by the way, we also got manufacturing data out as well today. And like I said, remember, this was a big data week, and that was also horrible. Matter of fact, the survey, the lowest in 16 months, all the way down to 46.5. Anything below 50 is contraction. But, Jason, the prices paid surged in the month. So, again, is there inflation? Isn't there inflation? Is it over? Is it not over? And it looks like it's not over, but we'll have to wait and see. I think the only way for inflation really not to make a comeback, we got to see no jobs, right? We got to see, instead of 12,000, we got to see like negative 120,000 jobs before I think it's over. And at least on the manufacturing side, market demand decreasing in the second half. They're hoping that it's soft only through the first quarter of next year. Sales have been very slow the past 6 years. Business levels remain depressed. This has been an interesting fourth quarter already. These were what they were talking about in the manufacturing side of things. So, yep, there you go. I don't know. You tell me. Gotta love these numbers. We're supposed to make all our important financial decisions based on this. We'll be back. 951-0592 Patriot Radio News Hour. Joe and Jason wrapping up the week here. What a crazy week. Right now, the Dow up 525 points. Up Amazon, I hear Amazon had a good quarter. Apple not so much, but the big joy here is the crappy jobs number. Feels like they're going to lock in another rate cut and also boast for a third one, right? You get a bad number now, right? You get one more bad number, right? Well, they'll cut in December too. S&P up 60. The NASDAQ is up 250. However, the bond market not playing along. 4.34, so right near the highs that we've seen, even though everyone's like, okay, we're going to get this rate cut, at least today the bond market is not playing. Again, remember, this has kind of been the problem now. This is new. This isn't supposed to be how it's supposed to work. We signal, right? You got to remember, they go through all these theatrics. We signal the market. We tell you what we're going to do, and then that way you do what you're supposed to do. Right? Yields are supposed to be falling right now, and they're just not doing it. Why? Well, everybody's worried we've reached maximum debt. I mean, it's pretty simple. Oil's up $1. Gold and silver are higher today. Gold's up 5 right now, $27.50. Silver's up 13, 32.75, and again the Japanese yen at 153. We'll watch for that. Is that coming back? Right, we know that's not over. So many reasons to be more diversified in this world. Yesterday, if you missed yesterday, really the last 2 days, a lot of stuff has come out, hasn't it? A lot of warnings in the debt markets. We had yesterday. We had panic in UK. Of course, don't worry, right? They'll smooth it over with some quantitative easing, I'm sure. But you need to be ready for when this bubble pops, because they all do. And this is the biggest bubble yet. Check out our friends over at YRefi, up to 10.25% fixed rate of return. Not correlated to the stock market, not correlated to Wall Street, not correlated to elections or war or anything else. You can compound your money if you want. You can use it as income. I mean, you can change it up. They don't charge fees. They don't attack principal. I mean, it's just a great thing to look at. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YREFI24, 888-973-3924. Remember, you can use those IRAs, those existing IRAs. You can use existing IRAs to also get some gold and silver, right? You can do all of that stuff. No penalties. Don't have to worry about paying penalties on that. That's a simple trustee-to-trustee transaction. Check them out. Now, how about this? This is another interesting news report. Is the war in the Middle East going to get worse? According to Axios, and people with inside Israel and the U.S. Defense Department, they're saying that Iran is preparing to launch an attack on Israel from Iraqi territory. So a change of play, I guess a change of venue, right? Hey, they're not going to launch it from their country. They're going to have, remember, right, we went into Iraq, and what did we accomplish? Well, essentially, now Iran seems to call the shots in Iraq, and they've got their militant groups, right, because the Iraqi government really doesn't control a large part of Iraq when it comes to who really has the power. Jason, and they're saying they're going to do it before the election. We'll see. I don't know. You never know what to believe when you see these reports out. But if they're going to do it, doing it from Iraq, right, make the war even bigger, I guess.
I have a feeling a lot of entities that feel like they want to try to sway whatever decision is going to happen on Tuesday is going to happen on Monday. Don't you have the feeling like we're going to get on the air Monday and start doing a show and a couple shows, and then right about the time we get off the air, something happens, right? or maybe the morning that we're on the air, something. It'll be something. There's a lot of nervous Nellies out there, right?
Oh, my Lord, you're seeing it already, right? There's all kinds of stuff going on in certain parts. Colorado's got a little scandal going. Pennsylvania's got something. Michigan, right? Arizona, right? It just seems like we're just going to be inundated with that. It is going to be a very, very noisy, I would probably say, well, it could be noisy all week if we don't know who's won, right? Then you're going to see all kinds of craziness. I saw parts of D.C. are boarding up their stuff because they're worried that there's going to be a riot in the streets. I mean, really? That's where we're at right now. This is how people have lost their minds. Everyone's lost their minds.
When you don't have good leadership, people stop trusting everybody because you don't know who to turn to, right, Joe? I mean, what we used to have, let's go back to the Clinton days. At least during the Clinton days, there was the illusion of leadership. Even if you didn't like the guy and, the Monica Lewinsky and all that, at least it's like it was a picture of leadership. He worked with Newt Gingrich to balance the budget, all that stuff, right, Joe? Now I don't think anyone in this country knows who to turn to. And for a lot of people, they're followers, and they want to have someone to follow, right? And it just doesn't seem like there's anybody that's really competent right now.
And then, you think about leadership. How about Boeing today? A new offer. There's going to be another vote on Monday. Here's some things, though. Number one, they scrapped DEI, so they got rid of that. Okay? They said, here's what's hilarious. You know what they said? We're going to go back to promoting people based on merit, right? If you actually know how to do your job, then we'll promote you instead of if you're the right color or I don't know, right? You got the right sexuality or the right pronoun. That no longer matters. So I thought that was positive. But here's where they're at right now. They're now bumping up the wage increase to 38%. over 4 years, so almost 10% a year over the next 4 years. They bumped up the signing bonus as well with a $12,000 signing bonus. Again, though, the big thing is they really wanted a reinstitution of their pension. That is not in it. There is no any improvement there. Obviously, the union workers have figured out, man, the 401k thing, not nearly as good as these pensions ever were. Even with a great stock market, the math just doesn't work. But we'll see, Jason. We'll find out on Monday if the machinists are going to come off the picket line. Like I said, the new offer, 38%, and this is how it's going to go. 13% immediately, then 9, 9, and 7 over the next 3 years, along with a $12,000 signing bonus. And they're saying they will match 100% of the first 8% of pay. So that's going to try to enhance that 401k form. We'll let you know.
From what little I paid attention to this, it was my understanding that it's all about the pensions. I mean,
right?
They're not going to agree unless there's a pension. So what are they going to offer these people 100%? Just, I mean, how draining to the funds of Boeing is the pensions? I mean, it just shows you what a weight that is for companies nowadays. That seems to be the one thing. So these were big numbers, but I mean, how big did these numbers got to get for them to start forgetting about the pensions? It looks like they're trying to go to the greed of the current employees, right, to wash away the pensions for future employees. That's what it looks like.
Right. You know, like I said, hey, we're going to give you 38% over 4, 13% immediately. Plus, here's $12,000. How's that? Will that work? And by the way, hey, we'll match the first 8% of pay. Well, I guess if you could afford to contribute 8% of your pay, then that's great. But if you can't, right, then that really doesn't do a whole lot for you. But, yeah, we'll see. I think that's what it's going to come down to. How big of an offer do we have to make to get you to forget about the pensions? And to Jason's point, this is costing Boeing. They just had to issue $20 billion worth of stock to get cash. Because this is how big this strike, how much money this strike is costing Boeing. But that just tells you how big the problems really are. How bad is it, right, for people once they retire and they don't have health care, how expensive it is. This will really, I think, relates very well to Medicare and Medicaid as well. Why is it so expensive? Right, when you think about the budget, right? Hey, right now that's the single. When you combine Medicare and Medicaid, we spend almost $2 trillion, $1.8 trillion just on that. So, Jason, I think for Boeing, this is it. I don't think they have a choice. I don't think they can go back to the pension, even if they wanted to.
So I have a feeling this next offer might get rejected. That's what it seems to me, Joe. But we'll see. I'm going to have to front load this thing a lot heavier, don't you think? Because that's all I ever hear when the TV is on pension.
I mean, when you're not working, right? You start to get a little desperate, and we'll see. I don't know the answer, but I guess there's another vote besides the election coming on Monday. This one is going to be the Boeing strike. We'll have to wait and see. And then, did you see Donald Trump, if he wins? Of course, we don't know if he's going to win or if he's not going to win, but he has already said that his Treasury Secretary is going to be billionaire John Paulson. Right, of course, right? Why not? Right? Let's have the billionaires all over the place saying that he was out doing an interview saying that he's going to work with Elon Musk to cut federal spending. So at least somebody is actually talking about cutting something. I don't know that they're going to do it, but his target, he said, reducing green energy subsidies It's going to be interesting because he's working with Elon, and that's how Tesla makes its money, right? I mean, I don't know.
We'll have a cabinet of billionaires running the country. Elon Musk and the Treasury Secretary. Oh, we're going to have them all, right? Just bring the billionaires in, and we'll see how it works out. We'll see. Cost cutting is what billionaires are pretty good at. I don't know if they'll actually cut. You know what? That's a good thing. We'll see it happen, and we'll see like 3 or 4 billionaires in the cabinet and see if any of them actually act like billionaires. Because you know what a billionaire does when they buy a company, right, Joe? They fleece it, they cut it, just wash up half the employees out of the company, and then they cut to make it trim and profitable. But why do I get the feeling the billionaires aren't going to be able to do what you just said, which is, we're going to cut some spending? Can they even cut the 1% that they're supposed to with their own rules?
Now, of course, as Treasury Secretary, he can't do it. Congress has to do it. But he said that he's got a good relationship with both sides of the aisle, and said that he believes that we can get something done. Unfortunately, all I saw was this energy subsidy thing. Again, that's not it. That really doesn't even move the needle. I wish it did, but it doesn't. At least someone said something about cutting something. I was so excited I had to talk about it. 800-951-0592, Patriot Radio News Hour here, wrapping up the week. Like I said, gold's up 5 right now, 27.50. Silver's up 14 cents here, 32.75. Today's special, and it is a really good one. Mint State 63 $10 liberties at $1,515, $1,515. That's $10 less than an ungraded Liberty today. And this is kind of nice where we have, this area, Jason, where all of a sudden a lot of gold and silver just kind of disappeared, but these premiums are still opportunistic, and we're getting now some of these graded opportunities. Everybody out there charges a fortune for these things. A good deal of dates as well. So usually when you get higher up the grading scale, you only get 1900, 1904, 1907. But they're telling me they've got a great group of dates here. Mint State 63 $10 liberties at $1,515 at 800-951-0592. And remember, in the gold world, instead of using 0 to 10, it's always 60 to 70. And when it comes to the Liberty, so the Liberty, you got to remember, these are the older, right? 1866 to 1907. There are no MS-70s. There's no MS-69s. 68, there may be like one, right? 68 and a handful of 67s, right? You're primarily talking about 60, 61, 60. Now getting to 63, that's a pretty high grade when you're talking about the Liberty Series, Mint State 63. You're going up. What is it? I mean, you have circulated. You got VF, XF, AU, BU, Mint State 60, 61, 62, 63. It's like 8 grades, if you will, and you're going to pay less than any of the other grades out there. Jason, it's always cool. We don't do graded coins a lot because they tend to, why pay more for the same amount of gold? But in this case, you're going to get the same amount of gold and actually pay less. And we, like anything else, when you go to sell it back, you're going to get paid a much better price for a Mint State 63 than you are for an ungraded coin.
It's always good to get a nicer coin for essentially the same price, less or just a little bit more. So, and we don't. This is the second time recently that we're doing the graded tens. We we don't do a lot of graded $10 liberties for sale. So some people took advantage the first time around. This is a second chance because, I mean, as far as
I
we know,
think what was it? We did Mint State 62s the last go round. So this is another grade higher, and being below what you could pay on a ungraded $10 Liberty here at $1,515. Pilgrim's Pride having one of the best days ever, as they said that due to super high inflation, consumers are eating out less and going to the grocery store more, and they're buying chicken. They can't afford the beef, but they're buying chicken. They're saying increase in demand for poultry products, sending their shares skyrocketing to a new record high when they reported their best third. Sorry about that. I apologize. I don't know what you heard or didn't hear about Pilgrim's Pride. They are stocks at an all-time record high. They had the best earnings ever in company history, saying that the consumer's unable to eat out and they're going to the grocery store and they're buying chicken because they can't afford beef, saying that chicken sales for Pilgrim Pride surging, and with the higher price, they're saying volumes are up 6%. And on top of that, Jason, right, they've raised the price 10 to 12%. So a huge quarter for Pilgrim's Pride, kind of more indicative of, hey, the I guess, what do you want to call it? The spend down effect continuing to go through the economy. We'll be back after the break. 800-951-0592. Joe and Jason wrapping up on this Friday here. Halloween sales down by, well, at least in the early indications, down about $600 million to $11.6 billion. Just tells you how expensive candy's gotten, right? Because the price of candy's gotten outrageous. But you go back to before the inflation, you know, like 2020, 2019, 2018, 2017, very steady. Between $8 and $9 billion. Got to last year, it was $12 billion. This year, down to 11.6, 12.2. Now they're saying 11.6. And even with the higher price of candy, volumes are down. That another good indicator that the consumer really is starting to feel the effects here of all of this pricing. And so, man, what a week. We had the JOLT survey saying people aren't posting jobs like they were. Like, what was it? Like 600,000 less jobs posted. But then we had a good labor report on Wednesday, right? We had a good jobless claims number on Thursday. We had the fake inflation numbers. I mean, they were, you know, what we expected, right? 2.1 on the headline, right? So they can claim their little victory dance, even though core CPI was up another 0.3. Pay no attention to that. Then today, we got that stinker of a jobs number, only 12,000 jobs created. The labor force participation rate fell. Unemployment essentially a whisker away from 4.2. On top of that, we have Supermicro, who just got put into the S&P, fallen like a rock for accounting irregularities. Bank of America saying they're going to be next as far as being prosecuted for money laundering, right, with drug money probably most likely, right, like TD Bank was. The BRICS, they announced 13 new members to their group, right, going from 11 to 24. And then, of course, all the war news, the election news. Jason, it was one crazy weekend when we're sitting here looking. I keep looking at the bond market and 39435. So we're back at the very top here, and now I'm seeing reports now they're saying that look for the 10-year note to go to 4.5. So it looks like the bond market is going to continue to put pressure on these debt markets, Jason, saying, hey, listen, it's too much risk, not enough reward, as Jeff Genlutz laid it out yesterday. Hey, if we're going to take a risk, we got to get rewarded for it. And it's kind of sad when you hear a guy like him telling us, hey, be ready for a failed U.S. debt auction in the near future.
Yeah, you've been talking about that for a while, and is it possible to happen? Is there always somebody that will come in and scoop it up, Joe? Isn't there always somebody? Is the guy in the back of the room that nobody looks at until suddenly he needs to come out? Isn't there that guy?
Well, I think Jeff Gunlatz laid it out very well. They'll just break the laws like they've always done. Obviously, I think immediately the first thing would happen is the Fed would announce an emergency window and start quantitative easing immedently. If they're smart, hopefully, these idiots pull their heads out of their backside and launch quantitative easing soon. Because the pressure is mounting, and I don't think the 10-year note stops until the Fed does that. I think that's where we're at. I honestly believe the quantitative tightening needs to stop, and the Fed needs to go the other way and announce quantitative easing. And then this is why we think gold prices are going to soar in 2025. These $10 Mid-State 63 $10 Liberties. $1,515. That's $10 below the ungraded $10 libs that we normally sell. And Jason, a good variety of dates as well. So that's also kind of a cool thing.
Yeah, it's a good time to be loading up on gold and silver. While you had your technical difficulties, I was just talking about how you're not really going to worry that, some people that were waiting through the middle of the year, gold was 22, 23, 24. Now it's in the 27.50 range just for the spot price. You're paying a lot more per ounce. But I really believe that this year, 2024, is going to be a year that people are going to look back. It's like it doesn't matter if you bought it at 24 or 28. When we're talking 3,000, 4,000, 5,000 range gold, I think in the near future, Joe, and no one's gonna think that you bought in too late at 28 when it could have been 24 or 2,000. When these prices do hit these really huge highs, especially when the inflation comes back, which I think happens next year, Joe, and it's going to be everything. Everything's going to be expensive. I mean, people think, I keep telling people, it's like the preseason. The inflation we had the last couple of years was like preseason. The regular season for inflation's coming. The real hardcore stuff I think is coming. You look at the 1970s. Every time the inflation came back, it came back roaring even bigger, Joe. And I don't see how this is any different. It's just packaged differently. It's being told differently, Joe.
Yeah, and again, I fully expect the Fed to lower rates next week. I think everybody does, and the bond market just simply doesn't care. By the way, 436. So here we go, right? Kind of ramping up here. What's going on in these debt markets? Again, these are just warnings, right? Understand what these debt markets are saying. That this is what we're trying to relay, trying to teach, trying to educate you about what these debt markets are saying to you. We'll be back with the final segment of the week. 800-951-0592, Patriot Radio News Hour. Joe and Jason, big $10 Liberty sale right now. $10 Mint State, 63 Liberties, $1,515. That is $10 below a regular ungraded circulated $10 Liberty at 800-951-0592. 800-951-0592. And, the cool part, they come in this hard plastic case and all that stuff. But for a lot of people, when you can buy a mint state coin, you don't really have to worry about if you're, selling it to somebody who maybe doesn't know a lot about gold. How do I know it's real and all this stuff? Well, there you go. It's authenticated. It comes with a serial number, all that kind of cool stuff. So take advantage while they're on sale here. Mint State, 63 $10 liberties at $1,515. We just got commercial real estate foreclosures up 48% year over year in September. California, a mess. Wow. 238% increase year over year in California on commercial real estate foreclosures. New York, 48%. Florida, 49%. It was increasing everywhere. There was some good news. The good news was that there are some buyers for all of this foreclosed stuff. So they are selling, some of these, of course, they're selling them for pennies on the dollar. But I guess if you want to say the good part of it is there is people out there that are buying some of this distressed property. So at least it's moving, right? It would be even worse if, we foreclosed, and now we can't get rid of it, right? At least they're going to get rid of it. Now, the problem is, Jason, they're taking massive losses, and the overwhelming amount of foreclosures. But it is an interesting point now where the New York Federal Reserve, check this out, they're now saying that 27%, I want to get this right, really, if I can find it, there he goes, 27% of bank capital is what they call extended pretend commercial real estate loans. So, Jason, it's like a big dead rock on these banks' balance sheets. And the problem is they're also being forced to buy all these treasuries because not enough people are coming to these auctions. Man, it's going to be interesting. I'll tell you what. I know we said this year has been the year of chaos. I wonder, what could next year bring? I don't even want to think about that right now. It's Friday. Let's think more positively. We got a great deal on gold today. Jason, that's a positive thing.
Yep, 800-951-0592. It's time to buy, guys. It's time to buy, and who knows what next week's going to bring. I know there's a lot of people that are, I'm going to wait. It might go down a whole bunch next week. Well, good luck to you. Because it could go up a whole lot. There could be an election result of any fashion on Tuesday, and then 3,000 gold is on Wednesday. I mean, it could go like that. It really could.
Well, I wonder what that would look like. You know what? I don't know. I truly don't know. I just don't think we're going to know who the winner is, and I guess right now the only thing I'm hoping for, no violence. That would be nice, right? No violence. Can't we all just get along? 800-951-0592. Jason and I are coming right back with the Half Empty Cup.